Trying to be a hero is a third mortal sin. In this context, being a hero means placing trades which require the stars to align perfectly to make money. An example is shorting the stock market. The blue line there shows the long-run nominal returns you'd get from holding $1 in the equity market since 1900. Negative stock market returns occur on average only once every 4 years, so it's pretty clear that shorting the stock market is unlikely to pay off unless you have some seriously excellent timing skill. Now, even if you do have excellent timing skill, it's good to assume that you don't. It's sensible to give yourself leeway to be wrong and still make money. The market doesn't reward daring feats of bravery, and there's plenty of trades available that don't require you to be such a hero. If you're bearish on global growth, for example, you'd be better off buying US Treasury futures or an ETF like TLT than you are trying to short the stock market. The Treasuries have a good probability of going up anyway due to carry and risk premium effects, even if you're wrong, whereas shorting the stock market will lose money most of the time. I'm aware that I'm not making a particularly sophisticated point here, but many traders ignore this. They overlook the obvious and discount good ideas that seem easy or self-evident. Our favourite trades are those which are likely to pay off even if our active views are wrong. We prefer trading stocks and fixed income actively to the long side, for example. Even if we're wrong about the active views that we've got, or our algos have, we're still likely to make money anyway due to the drift. For this reason, we prefer trading stocks and bonds over FX or commodities, because they do have this inherent bias that gives us some wiggle room in our trades. FX doesn't have a clear structural bias like this, but we can get a small advantage by preferring to long higher yielding currencies and short lower yielding currencies. All things being equal, trading this carry has tended to buy us a small edge, and small edges add up. Another way people try to be a hero is in being overly specific about the specification of their trading strategies. The more rules and parameters you add to a trading strategy, the more brittle it's likely to be, and the less likely it is to be profitable in a range of future outcomes. An overly specific implementation of a good idea can lose money even if the core idea is sound, and it sucks to lose money when you're wrong. It's even worse to lose money when you're right about the core idea. In your trading, always assume that things aren't going to go the way you expect them to, and give yourself a good chance to make money even if you're wrong. The main strategies we use to do this are preferring to trade in line with risk premium and structural biases, simple systematic trading rules, and not optimizing trading parameters to the past, but instead diversifying over a range of reasonable parameters instead. These are big topics, and we'll cover each every week in the bootcamp.